All right, so we got the latest CPI print in Canada for the month of February on annualized basis. The inflation, the overall headline inflation is 2.8% on annualized basis, which is lower than what we saw back in January, which was 2.9%. So from a trend perspective, it is trending down, which is good news. This is exactly what we want to see. The inflation should come down. But if we look at under the hood, we see that pretty much everything else is still rising except furnishing, equipments, household operations, recreation activities are still increasing. So clothing, footwear, all of that stuff is decreasing, but food, shelter, transportation, healthcare, personal care, recreation activities, all of these things are still climbing up, especially shelter still in the 5 range on yearly basis. And shelter comes with mortgage cost and the rent prices as well. So we are seeing the mortgage cost is also kind of trending down because of the base year effect. We saw huge mortgage spikes last year, and as we move along, we will see some sort of a downward trend on the mortgage cost perspective, but the rent is still high and is still climbing up on monthly basis as well because of the huge population influx. So overall, the headline inflation is down, but when we look at the core inflation, which is excluding food and shelter, that is still above 3%. And this is where Bank of Canada looks at it, where the core is actually heading. So core is basically moving sideways. It goes 3.2, 3.3, 3.1. It's kind of, moving sideways from that perspective. So that's a worrying sign for Bank of Canada, because if the core doesn't come down below 3, that is not a good sign for Bank of Canada before they can act upon any potential rate cuts. If you look at the mainstream media, pretty much everybody is expecting rate cuts to happen this year, most likely in June or July. That's what the market is expecting. I don't see this is happening. And the reason is because the food and shelter and transportation costs are still rising on monthly basis. Next month, the federal government is putting new carbon taxes on the fuel, the gas that you put in the car, and also the natural gas that you use for heating bills. So your heating bills will go up, your transportation costs will go up, and it will have indirect effect on the food prices, because pretty much every food item is transported. If the fuel goes up, the transportation cost goes up, and hence whatever is transported will also go up as well. So over the next 2 months, we will see most likely the inflation will spike up as a result of Trudeau's carbon tax. That's going to happen, guys, and this is pretty much written on the wall. And if you look at the US economy is still pretty damn good, at least from the paper perspective. So I don't see Federal Reserve is cutting rates anytime soon, because back in the early part of this year, the market was pricing in 6 rate cuts in the US. Now they're pricing it 3 rate cuts at this stage, 2 months after maybe just 1 rate cuts. So the expectation, the probability of rate cuts are very rapidly changing, given all those numbers in terms of all-time high stock market. The bond yields are still, hovering around 4%, and the US economy is producing, positive GDP numbers. So with all those encouraging data in the US, I don't see US Federal Reserve will cut rates anytime soon, and Bank of Canada should and will not cut before the US Federal Reserve. So they're walking on very fine line, guys, because on one hand they have a recession in the Canadian economy, which of course we are seeing it's all over the place, right? It's not visible from a official numbers perspective, but if you look at unemployment rate, if you look at the delinquencies, insolvencies being filed by the small medium businesses, it's all happening. Okay, on the other side we have currency, Canadian dollar. So if Bank of Canada prematurely starts cutting rate, it will basically crush the Canadian dollar against the foreign exchange market, especially in the US dollar, and that will basically Canadian bond market less attractive for the foreign investment. So of course it will make our currency devalue, and it will make our imports expensive, which will definitely put inflationary pressure back up again. So on one side they have the currency that they have to protect, and the other side they have the economy that they have to protect as well. So if you look at Bank of Canada's mandate, they have only two mandates, maximum employment and price stability. So if they have to choose between currency and recession, they will most likely choose currency protection and let the recession happen. This is what happened in the history. Okay, the banks are always there to protect the financial system, the currency, the monetary system. Okay, yes, economy, they also have to take care of this, but when they have to choose one over the another, they will always choose the banking system, the currency, the monetary system that they have to protect in all cases. So what's going to happen? I think the inflation will hover around this level, and it will probably spike up a little bit once the carbon tax is applied, and this is all reflected in the number. I don't see US Federal Reserve is going to cut rates anytime soon because of all those positive economic numbers. So there will be more pressure on Bank of Canada to walk on that fine line. But I think they won't cut rates first before Federal Reserve. So they will wait for Federal Reserve to pivot first, and then they will slowly tiptoe and then try to cut rates on their side as well. But it won't be too much. It won't be aggressive. Maybe 0.25 this year, maybe and 0.25 at the end of this year as well, and that's it, right? You don't see the rates are going back to pre-pandemic levels. You don't see the rates are going back to sub 3% anytime soon. It's not going to happen unless something drastically happens. The unemployment shoots up to 8% and GDP is basically -2, -3%. Then of course they will have to stimulate the economy. But at this stage, when the economy is still barely positive, then inflation is still hovering around 3 and high 3s, then I don't see Bank of Canada should cut rates at this time. But could be wrong. This is just my thesis, just my opinion that I'm just sharing with you. Let me know what you think about that. Put your comments down below, and I will see you in my next video.